Good evening traders, it's Simon here with a late weekly review. This week again we'll look at the dollar pairs and we'll see how everything goes. So looking at the daily chart on the DXY, it says to me we could be in a bullish situation. Bear in mind we've tested this daily 50 EMA and almost tested the bottom of the box there. And I can see why people say, yeah, long. I have a little problem with that, and the problem is this key level of 97.5. It's been so key throughout the last several years or so that trading into this level is not what I'd like to see. And likewise as well, when you pop down to the DXY on the lower time frame, you have this like some form on the 4-hour chart anyway. You've got this like wedge maybe forming, depending how you want to draw the trend lines. You'll make it as bullish as possible. I mean, that's kind of okay, that trend line there, but no matter what you do to include these two highs here, it hasn't broken this downward sloping trend line yet. So for me, I haven't turned bullish yet, and at the same time as well, it is making lower highs and lower lows leading down. So trading into the key daily level and having low highs, lower lows with no actual trend change happening. You could say the 1 hour 50 EMA may change trend, but for that to happen, it's got to come down, make another a pattern here somewhere. So I'll be sitting on my hands for a moment to see really what happens. But it's not my ideal situation to trade into this key level, and there'll be a few pairs along the way to explain that as well why. So Aussie dollar itself has moved down significantly. I was expecting a little bit of a stop around 0.7, and when you look at the volume here, this bullish candle here, the volume was quite higher. So for me, I thought that may actually move up. I didn't take a position long with this pair. It just never really fulfilled me. The reason why, again, if you draw on your intraday chart a trend, downward sloping trend like that, you'll see what I mean. If we go there, and I'll show you exactly why I didn't like this pair at all. And what's happened is, on the 4-hour chart, you can see the 4-hour 50 EMA has been tested consistently all the time and bounced off it. So I never took a trade long Aussie dollar at all anywhere. So I've not lost no money there, nothing at all. So this week now, the problem I have is bearish engulfing candle is done on low volume. So I don't like that kind of trading at all. I won't want to go short there. And you see what's happened after, almost the same amount of volume, and the price has not moved. So that means there's a big fight happening. And when you look down here on the lower time frame in the 4-hour chart for the last day, all the volumes has moved nothing. It has not moved at all. So for me, I'd be very wary about going short this pair just yet. Again though, likewise, I wouldn't want to go long into this 4-hour 50 EMA at the moment, because you can see how key this 4-hour 50 EMA has been over the several weeks or so, and even months actually. So for me, it's just sit on my hands and wait there. The euro dollar, on the other hand, is again one of these pairs where you go straight away, I want to sell this pair. That looks like a good trade to sell. I mean, it's got all the hallmarks. RSI's at 100. You've got this downward sloping trend line as well, which is quite nice. Daily 50 EMA, a couple respected candles as well. Problem is, so these candles are on low volume, so it just means there's not much interest there. Now, when we go down to the lower time frame of euro dollar, what you have is higher highs, higher lows, linking these together. And if you notice the volume on this pair, this doji candle is almost the same volume as this bearish engulfing candle, which means there's a lot of stopping power there. A lot of people are either getting out or buying there. There's a big fight. So for me personally, I wouldn't want to go short unless we break down this upward sloping trend line. Not that it's my style of trading anyway, because the minute you do that, you're going to be met with the 1 hour 50 EMA may move back up, then pop down. So here's your problem you're going to have. You're going to have either this just moves down and then there's no trade to get in because you want to trade through that line, or it moves up and shows a rejection on this trend line, in which case I wouldn't want to trade through it again either. So for me, this euro dollar pair is out the picture as well, and this is where my problem comes in with most of the dollar pairs. It's going to be difficult to trade it just because there's too many charts saying too many different things, which isn't very good. So pound dollar would probably be your best pair to trade if you got in at a decent level. You probably wouldn't. Again, I see this being a lower high, so I do see this as being a bearish kind of setup here, but I don't think the pound dollar is the best pair to go short with. Again, if you look at the weekly chart, we just looks like we might break down. If we break down this level here around about 1.28, would definitely look like this is a bit of head and shoulder pattern. So breaking down here would definitely give me this indication of the bearish pressure. but I didn't take my short there. I took my short on pound Aussie, and I got in around about this area here somewhere, this price level. Obviously, it's just chopped around and popping back down again, hopefully. This is the weekly chart, double top pattern there forming as well, bearish engulfing candle for me, so I'm happy to maintain this trade at the moment. As I hold it, I'm getting paid to keep the position open. So this is the kind of style I like, double top pattern there as well. This is what I do like as a trade, and we'll just see how it goes step by step. But I wouldn't go pound dollar short either, because it's too many days into the run. You see, I got in here on the second day into the run, and when you look at pound dollar, to give you an example, you're on 1, 2, 3, 4, 5. It's the sixth day into the run. It doesn't give you that much confidence to keep selling it now, right at this very point. You want to get in at the top somewhere, so you pretty much missed this boat as well. Kiwi dollar is a pair which is just in the middle of nowhere. I wouldn't want to go long or short this pair. I'll just explain why. This overall trend down, we're almost at the bottom of it. We're coming down to 0.65, which has been key in the past, so I don't want to trade into that. Likewise, this downward sloping trend line has not been broken to the upside, so that is going to be a big no-no for me. I'm sure it'll be the 4-hour 50 EMA again on the lower time frames, and if it did break out to upside, I would need a trend change, because that is a big bear trend. Personally, myself, if I was to trade this pair right now, I would wait for a move to come back up to this area here and have a test of this 0.6725, and then the daily 50 MA will just swoop around and come back up as well. That would be what I'll be looking for my best ideal trade. Until such point, this is just, it's moved, and it's going to be difficult now to get a sell in here if you're at the very bottom after several weeks being in a bearish position here, so I wouldn't bother that either. We have dollar CAD next, and again this is the same problem. You've got this is just chop. All this is just chop. Look, it's down, up, down, mutual, up, mutual, mutual, down, up, mutual. It doesn't do anything. It's not moved nowhere for 2 weeks. And the problem you have with this is price is kind of in this area of this box. It's trapped with the daily 50 EMA, and if you do sell it, you're going straight into this upward sloping trend line you are, which on the weekly chart is quite a strong trend line. And you got the weekly 50 EMA, and you got the key level here. So you wouldn't want to go short, and you wouldn't want to go long here. So you're just better off looking at another pair altogether, because this is not what you want. You want to see the breakouts, trade the breakouts that way, not this kind of stuff. Unless you really believe it will go long or short, then you can obviously do that, but that's just not my style. And you got the same problem really with dollar Swiss as well. So dollar Swiss now looks like it's making a higher low again on the daily 50 EMA. I'm sure we can draw a trend line in now. Yeah, pretty much draw a trend line in there. You can, which is nice. Does it go any further than that? Any further down? No, we're going further than that. There you go. You've got a 3-touch trend line, I know you have. And with that, you're going to have the daily 50 EMA, no problem at all. But again, you're trading to this key level here. So you've got this key level at 1.01. As you can see, it's been key in the past. Now, you know I was short this pair the other week or so. It moved down. Obviously, it took my take profit nicely. Little 1.7% trade there that was. Now, I'm not going to go long, as you know my theme with the dollar. So that's done really. Let's just look at dollar yen as well. Dollar yen in the middle of nowhere. I'm not even going to go much into this at the moment. I don't like this pair really as such. I want it to go a little further lower down. I want some more support and more rejections as such. We're not getting nothing really, so I don't like it. So let's look at the things I do like, or what I've been looking at. So one of them was the Dow Jones 30. Now on the weekly chart it has moved down nicely. We did predict in our monthly review this would move down as well, and as you can see it's moved down nicely. So what I'm waiting for now is some form of pull, a little bit move further down lower, and then some pullback to test this daily 50 EMA. So that's what I'm waiting for this trade as well to get in properly. That'd be a beautiful trade to get in. I'm also long Swiss yen here. This is my position. I like this trade. It's not so bad. It's only a 1.5% trade. I'm just targeting 109.5. Sorry, this kind of area here. This is key level, and we'll just monitor it by ear to see what happens. Notice how this doji candle's on lower volume than everything else, so I'm not too bothered at the moment. We'll play it by ear to see what happens. Let's look at the lower time frame on that. We might be able to see what's happening. Let's have a look. The 1 hour 50 is being supported, and the 4 hour, that's it, yeah, the 4 hour 50 was giving us problems here. So it came up, come down, come up, come down, then it broke up to the upside. but on low volume, which is a bit naughty really. I don't really, not interested in that too much. And then now we're just chopping around doing nothing. Notice how this retest of the 4 hour 50 is of high volume. So you've got a retest of the 4 hour 50 and the 1 hour 50 as well here. So you could say there's a trade there. You may want to trade that long. That's not so bad actually. It's a good little idea there. Obviously, if you're on the lower time frame waiting for a breakout, it'd be you break this trend line there, you would. So let's just go down to the 5 minute chart and just see what we got there. And yeah, so what are we waiting for now really? Ideally, we got this quad bottom here, 1 2 3 4 there. So I'm waiting now for a break to the upside. You could take that trade pretty soon actually, guys, as well. Maybe by the time I've uploaded this, you'll have a decision what's happened there as well. And the last trade we'll look at for you is gold. So gold's broken out of its pattern. Now I had a triangle on this pattern the other week, and I've changed now to a falling wedge. Either way, doesn't matter. It's broke out nicely. If you notice here as well, fairly half decent volume. It broke out nicely. I'm looking for a little bit of a pullback down to the daily 50 EMA. But if you look at the 4 hour 50 EMA as well, if we come down to the bottom here, gold. There we are, 4 hour chart. So I was looking for maybe a breakout. If we broke out there, we never did break out here a few weeks back. I just waited and waited. That's what I always do, wait and wait and wait. So you see now here, 4 hour 50, 4 hour 50, 4 hour 50, 4 hour 50. Move back down to around about be 1290 roughly, that kind of area. That's what I'll be looking for, and then test the 4 hour 50 and go from there. If it comes down further to 1285, that would be a very, very nice trade there as well. So if you've got this kind of level here like that, if you could place your order there for a 24 hour order, maybe a 36 hour order, have your stop there like that, and then you can target. What would you want to target? You probably want to target the highs again maybe. So let's say 1340. And there's another 5% trade there. So you've got a couple of options coming this week. But most dollar pairs, I wouldn't really want to touch at the moment. I think they're all too messy and indecisive at the moment. Okay guys, any questions, give us a shout. If not, happy trading and speak to you soon.